Hey guys, welcome back to our channel Business Ideas. In this video, we will be talking about stock dividends and how to make money with them. But before we begin, be sure to subscribe to our channel so you never miss out on our latest uploads. Now, without further ado, let's begin with today's video. What are dividend stocks? Dividend stocks are typically issued by well-established companies that have a history of generating consistent profits. They pay out a portion of their profits to shareholders in the form of regular dividend payments. Dividend payments can be made on a quarterly or annual basis, depending on the company's dividend policy. One of the main advantages of dividend stocks is that they provide investors with a reliable source of income. Unlike other types of stocks, which rely on capital appreciation for returns, dividend stocks pay out a portion of their earnings directly to shareholders. This means that investors can earn a steady stream of income from their investments, which can be especially valuable for those who are retired or nearing retirement. Advantages of dividend stocks. There are several advantages to investing in dividend stocks. Firstly, they can provide investors with a steady stream of income, making them an attractive option for those looking to generate passive income. This income can be reinvested in additional shares, allowing investors to compound their returns over time. Secondly, dividend stocks can help protect against inflation, as the dividends paid out can increase over time. Inflation can erode the purchasing power of an investor's savings, but dividend payments can increase over time, helping to offset the impact of inflation. Finally, dividend stocks can be less volatile than other types of investments, making them a good option for those looking for a more stable investment. This is because companies that pay dividends are often well-established and have a history of generating consistent profits. This can make them less susceptible to market fluctuations and economic downturns. Disadvantages of dividend stocks. While dividend stocks can be a good investment, there are also some disadvantages to consider. Firstly, not all companies pay out dividends, so investors may have limited options when it comes to selecting dividend stocks. This means that investors may need to do more research to find companies that meet their investment criteria. Secondly, dividend payments are not guaranteed and can be reduced or suspended at any time. This can happen if a company experiences financial difficulties or if it decides to reinvest its earnings into the business instead of paying out dividends. This can make dividend stocks less reliable than other types of investments. Finally, the dividend yield on a stock can be affected by changes in the stock price, meaning that investors may not always receive a consistent level of income. This can make it difficult for investors to plan for their future income needs. How to choose dividend stocks? When choosing dividend stocks, there are several factors to consider. Firstly, investors should look for companies that have a history of paying consistent dividends. This can be an indication that the company is financially stable and has a long-term commitment to rewarding its shareholders. Secondly, investors should consider the dividend yield, which is the annual dividend payment divided by the stock price. A higher dividend yield can be attractive, but investors should also consider whether the company is sustainable enough to maintain the dividend payment. Finally, investors should consider the company's financial health and stability, as this can affect the likelihood of the company being able to continue paying dividends. This can be assessed by reviewing the company's financial statements and analyzing its debt-to-equity ratio, cash flow, and profitability. Dividend stocks can be a good investment for those looking to generate passive income and protect against inflation. They provide a reliable source of income, can be less volatile than other investments, and can offer the potential for long-term growth through compounding returns. However, it's important to note that dividend stocks are not without their risks. Dividend payments are not guaranteed, and companies can reduce or suspend dividends at any time. Investors should also be mindful of the stock price, as changes can affect the dividend yield and the consistency of the income. Well guys, that's all we have for you today. What are your thoughts on this? Get involved and let us know in the comment section down below what you think about today's video. If you liked this video and found it informative, then be sure to give this video a big thumbs up. Also, if you don't want to miss out on any new future videos like these, then be sure to click on the subscribe button and turn on the notification under this video so that you're notified the next time we upload a new video. Thanks for watching, guys! We hope you have a great day today, and we'll see you in the next video.